stage. Here to discuss a founder chat, seed stage, make some noise for Sevetri Wilson and moderator Megan Holson-Alexander.
How y'all doing? You look beautiful. All this chocolatiness and these smiles. Thank you all so much for being here. My name is Megan Holson-Alexander, and as mentioned, I'm an investor at Unusual Ventures, and let me face this way. We're a seed stage investment firm, closer. And we consider ourselves a high fidelity seed investor, meaning we don't give out a dollar that we can't support. Meaning if you call us, we're gonna pick up the phone. Somebody in the office will be there for you. And I'm from Alabama, and I've got an accent, and I'm gonna try to control it, but sometimes it comes out. So I'm gonna do my best, all right? Y'all ready? We've got about 20 minutes, and then we're gonna do 10 minutes of Q&A. So let's jump right in. Hey girl. Hey girl.
Hey.
How you doing?
I'm doing great.
Wonderful, wonderful.
Yes. And we'll try to talk loud. We know we could be muffled with the background noise, so we'll do what we can do.
Awesome. So the first question I want to ask, one thing that's really important here at Afrotech, and is really important for Unusual Ventures, is that entrepreneurs can come from anywhere. And so one of the things that makes people and entrepreneurs authentic to their problem is their background story. So I'd love to hear more about you and who you were before entrepreneurship. Where are you from? What did you do? What are you all about?
Yes, so I'm from New Orleans, Louisiana. I actually grew up in a smaller rural city right outside of New Orleans. Went to LSU, studied at Harvard University. When I first started, yes. When I first started my entrepreneurship journey, I was in professional services, right? So we weren't creating a technology company. We were trying to do core communications, marketing, PR. So the idea of venturing into the tech space with no technical background was very different for me and not the world I came from.
Got it. So you started your first company at 22. And I was still accidentally putting my clothes on backwards at 22. So how did you do it? What was your motivation, and kind of what was the insight to get the company started?
Absolutely. So I started my first company when I was in grad school. I felt that there was an opportunity to do consultancy work, primarily for communications and management clients and companies.
Okay.
And so at that age, one, I didn't know what I didn't know, but I felt that I had enough expertise and something to offer, capabilities to offer people that made me an asset.
Sure.
And so I was an individual consultant, started working with clients, began to build my company literally person by person at 22.
Yeah.
And I was going out 22, black and a woman, asking people to give me six-figure contracts, right?
Yeah.
And I was dead serious about it. And what I learned from that experience was, one, it was important for me to gain the capabilities that I needed in order to fulfill the contracts.
Right.
On top of the fact that literally I was what I consider a triple threat, right? So when I came to any boardroom, I couldn't hide who I was, but I was still demanding the opportunity to play the game.
Right. Demanding a seat at the table. Very important.
Absolutely.
Very important. So oftentimes when we start businesses, we can be very discouraged by external factors, right? So I don't have the right network. I didn't go to the right school. It's very difficult to get a small business loan. So how did any of these things, if at all, affect you, and how did you manage?
Absolutely. So when I started my first company, I literally didn't have a network of people to plug me in. I'm a first generation college student, right? So first person to go to college in my family of my siblings. I didn't have a last name that people knew in the city. Like, no one knew who I was. And so I literally started just reaching out to people And it could be very spontaneous. It could be through an introduction, from another introduction, to get in front of the people who could essentially tell me yes, right? And it was very challenging. Like I was talking to someone today, and they were like, oh, I felt like I started so late in comparison to you, but that's not taking into consideration how long it took me to really get going, right? And so there were many years where I had to really play catch up in the space from those who were leading the industry, those who were getting the contracts, the doors that were closed on me. But one thing that I told the individual today is that the difference was, one, I wasn't afraid to step into what I believed I deserved.
That's a fantastic line. Don't be afraid to step into what you believe you deserve. And sometimes negative self-talk, society can kind of creep in, particularly as people of color, and I think keeping that in mind as a reminder is critical. So you're going around asking for money for this company. Were you going to venture capitalists? Were you just going to angel investors? What was that process of raising money for a professional services company, which is very different from the normal venture capital software?
Absolutely. So the people that I grew up around, the black millionaires that I knew, didn't come from tech, right? They came from real estate. They were attorneys. They were doctors. And so I had never been around blacks in tech. And I definitely hadn't been around blacks in tech who were VCs or people who had raised money for a tech company.
There's only like 6 black VCs.
And so just imagine, they're not in New Orleans. They're definitely not in New Orleans. And so my head was down building a company, and we were so just focused on building a scalable company, getting traction, bringing in revenue. And when I set out to raise capital, I felt like I had those things in order, but what I did not have was the network. And not having the network literally set us back in raising capital when we first went out, because we just didn't know anyone, and we particularly didn't know anyone coming from New Orleans, right? And so I had to fly to here, San Francisco. I had to fly to New York to try to get in front of investors, whether that was through introductions from founders and other people. And we were going to the table with thousands of customers. We were going to the table with revenue, and at first we didn't get any door, like no one was generally receptive of allowing us to really share our story or present. And so that was a awakening for me, and one that I had to step back, because for me in professional services, and it had been more about how much money you made, right, and not how much you had raised, because that just wasn't the space we were in.
And another really interesting point there is people can tend to get hung up on how much traction do I need to have before I go to a venture capitalist? How much, monthly recurring revenue or how much annual recurring revenue do I need to have? The key is actually finding the right investor for you, because there are some investors out there, including Unusual Ventures, that will fund an idea. If we think that it can be really big and we think that the market is there, we don't even need traction. I wish I could tell you how many raggedy people come into the office with nothing, right? And have the potential to get funded. So please don't limit yourself and say, well, I only have 1,000 customers. I only have $50,000 of revenue this year. Don't let that be a barrier, because there are VCs who will fund it if the idea is awesome and the insight is awesome and the founder is awesome. So that's one of the biggest things I get. It's like, oh, I don't have enough traction. I don't have enough traction. And it's like, if you have the idea, bring it in anyway. Because other people who are not black are not afraid to come in there real unprepared for the possibility to get funding. So don't be afraid. All right, so you go on to start company 2. What changed? What changed about you, or what changed about the landscape, the seed landscape, which is much later now, right? So what we hear a lot is that the seed market is overcapitalized, all these different kind of buzzwords. What changed about you or the market that kind of allowed Exec Me Now to come into place?
So I don't think it was that much about the market that changed. It goes back to something that you said. I found the right investor for me, right? And when we had been out searching, right, for what we would consider a lead investor. Found that lead investor here in San Francisco, and everything began to start turning around, right? And because that person had essentially validated us, right, and was willing to reach out to other investors on our behalf, bring in other people in our round, share his due diligence and his team's due diligence with other investors, things started to turn around for us on raising capital. And so it's so important to focus on like the investors who are aligned with you, and the investors that I thought that was going to be, it just wasn't the investors, right, for me. And so it taught me that I was resilient on a whole other level. Yeah. Because raising capital.
You're a black woman. You already had that.
That's what's on a whole other level, right?
Yeah.
So we know, I mean, being from New Orleans, you have to be resilient, period. But raising capital is a very humbling experience, and it's a very long journey, particularly for women, for black people and people of color in general. And so there were times that I look back and was like, man, like, should I have sent someone else to raise capital from my company, right, that didn't look like me, with the same product, with the same deck? Because sometimes I knew, sometimes, it wasn't the right fit, but sometimes I wasn't the right fit.
So can you tell me how you decided to narrow down which VCs you were going to reach out to? Did you create a list? Did you start talking to folks and narrow it down that way? Because there's hundreds of VCs who do hundreds of different things. How did you get down to the right investor?
Absolutely. So we definitely heavily focused on targeting investors that invested at our stage, one, invested in companies maybe not like ours, but definitely in our same sector, whether that was SaaS, whether that was enterprise B2B models like ours. And so we were very strategic around who we went to. And then from there, I began to create almost like a funnel, right? So you can go on LinkedIn and you can see who is connected to the person that you're trying to connect to, right? And so I began to see who could make an introduction to the investors that I was trying to get in touch with. And that generally was either a founder, maybe an investor who I had already spoken with, or who had come into our round or was considering it. And so we were very strategic about how we went about searching out investors. And going back to our network, right, because we didn't have the network, I don't have the story where we reached out to 100 investors, because I didn't get introductions to 100 investors. Had I may have pitched 100 times, but that just wasn't our story. We pitched to a very limited amount of investors, and that was based on like the network, those who we were connected to, and our ratio of actually, once we got in front of that investor, closing them was very high. But it was about getting in front of the investor, which is, for us, one of the hardest parts.
And I think one of the biggest keys is like meeting people and coming to events like this. So serendipity tends to happen when you put yourself out there. When you go to events like Afrotech and you see two people sitting on the couch and you just plop down with them and be like, hey y'all, what y'all talking about, right? And you never know who you're gonna meet and who can introduce you. And I found that people have been dangerously successful from having that mentality and just going out and meeting people, particularly in this area. So deal time comes. You find the right VC, you get to do a deal. Evan Spiegel, who is the founder of Snapchat, said that there's three things. There's valuation, there's terms, and there's investor. And as an entrepreneur, you can only pick two of those things. Either you get the good terms and the good investor at the end, evaluation, or valuation, or you'll get a good investor and a good valuation. So when you were deciding, did you only have to pick two, or do you think that you ended up with kind of the perfect deal for you with all three things in place for Exempt Me Now?
I felt that we ended up with great terms. I will say that another black female, Jewel, I think she's here somewhere, at least in the building. Yeah. She's the founder of Part Pick. A conversation we had actually pushed me back to negotiate even better terms, valuation,
fantastic.
In which I got, right? Mm-hmm. And so I think that oftentimes black founders can be in a position where they feel like they can't negotiate back because it's like, well, I worked this hard to get the investor. I'm not trying to lose the investor.
Yeah.
And so you might be in a situation where you accept terms or you accept a valuation that's much lower than what you could have gotten had you like held your ground, but having to like know like when to hold them, when you actually deserve that valuation based on your traction and your company. And we went out and we did. We raised our valuation and nobody balked at it.
So you brought up a really good point. In these positions, oftentimes people give the investors so much power. And when you have an investor, the way that it's particularly an investor who goes on your board, you know, board members should be nose in, hands out, right? Execution is all on the CEO and the entrepreneur. But when you were going around to investors and picking and choosing terms, did anybody try you? Did anybody like push you?
So many people tried me.
Tell us what happened, girl. What'd you say?
So I remember, and people could try you in a lot of different ways, right? And so I pitched to a group of majority white men, and they were like a syndicate more than a fund, but they were like in their own right. They wanted to be much larger VCs, but they could write large checks, right? So for a seed round, they could write $1 million check, they could write $500K, and collectively come together and get that as a group. And I remember going through due diligence, a very rigorous due diligence process with them, and we ended up not getting the investment. And so I sat down, they're willing to sit down and kind of go over like the reasons, and they're like, no, you actually had a very strong SWOT analysis. We're actually surprised that we didn't, like, people come to the table to invest in your company, and telling me some of the reasons, etc. And it was like, yeah, we weren't sure, and this was like early on, right, in our pre-seed round, and he was like, we weren't sure if you were going to be able to bring your CTO full time. He talks really highly about you, and he chuckled at the fact. He was like, yeah, you know, I think that maybe it's more of a like situation, and maybe like if he wanted to like marry you or something, then he
no ma'am.
I was like,
no
what?
Ma'am.
What? And so he made it seem as if the way that I would attract a talent was because of my looks or anything about me physically.
Yeah.
And it just like blew my mind. He thought it was funny, right? And it wasn't because, oh, we had a mutual admiration for the work that we had presented, and because I was a strong leader, that I am able to attract talent irregardless of sex, color, and all these other things, right? And so it was just like the audacity, right, of him to even present that to me and just be so clueless about it. So, yeah, we've been testing a lot of ways, but that's just one that always just stayed with me.
It's a very bold move, and the power dynamic can often be very imbalanced in Silicon Valley. And so knowing kind of to be confident in yourself and like what you deserve and what you bring to the table is also really key, because it's very easy for people who can write big checks to try to tell you what you should do, and then you feel like you need to do it, which may not be the case. So confidence is key. Kind of command over your strategy and command over your company is critical. So 2 last quick questions, and then we'll go into the 10-minute Q&A. So you've raised millions of dollars. You're closing a seed round. What happens next, right? In the next 6 months, what is coming up for Exempt Me Now? And do you have any kind of closing words of advice for the entrepreneurs in the audience, for the people who are attempting to kind of get their business off the ground?
Absolutely. I think that for us, what's next? One, we're hiring. So if anyone's interested in joining us in New Orleans,
get you a job.
Come talk to me. We're heavily focused on the next versions and the next stages of our technology. And so we're heavily focused on building out our technology as a company, our go-to-market strategy. 2019 is a really big year for us, and we have goals, we have numbers that we're seeking to reach, and so we're heavily revenue-driven, heavily technology-focused as a company. If I could leave any parting words with you all, it would be definitely going back to being resilient and not getting up, but make sure you have the right people in your corner, the right advisors get out there, network, meet people who are in your space, and don't be afraid to ask them the questions that you just don't know that may sound kind of like crazy to ask someone. And know your stuff. So when you get up there to present, like, know your numbers, build a strong team around you of people who can get the work done, and just keep going.
Thank you. Thank you so much.
Thank you.
All right, so we've got about 10 minutes for questions. So if anybody has a question, feel free to raise your hand, and we'll have a mic coming around, I think. Perfect. Any questions for Sevetri? Right, we got one right here. I think it's right here. Oh, there we go.
We'll just, yeah.
Thank you. Hi. What's the hardest thing about being a Black woman and entrepreneur?
So many things are hard. Can you hear me? There we go. You got it? So the hardest thing about being a Black woman, I think that we just carry a lot on our shoulders, and people expect us to do it, right? So they just expect us because everyone can generally count on Black women. I just feel that way, and I feel people intentionally, unintentionally do it and not realize that Black women also need some support as well. And I think that going back to your point about have you been tested, I feel like people test Black women a lot. But trust me, I'm the right one.
Hello. Hi. Thank you so much for this. Appreciate all your insight. My name is Vambai Kajese. I'm building out an image marketplace for people of color that brands can use in advertising. Can you hear me?
There you go.
Yes, okay, yes. So I'm building out a marketplace of people of color images that brands can use in advertising. So I'm here raising seed, and so I really appreciate being here at Afrotech. So, now everybody can hear me. So I have two questions for you. Everybody talks about the struggles of being a Black woman entrepreneur. My question to you is, what has become easiest for you now that you've been on this journey, and what's been great about being a Black female entrepreneur? And my second question is, can you talk a little bit about how the funding rounds have changed a bit in terms of the amounts that people raise? Seed, now there's pre-seed, people are talking about seed 2, et cetera, et cetera. Can you please talk a little bit about that? Because I've been given so many different numbers to raise for pre-seed and then seed and, et cetera, and the difference between raising from angels versus venture capitalists. Should you have pre-seeders, or should you just have a venture capitalist to take you all the way through Series A? Thanks.
Yeah, so what has changed, I think that having capital allows you to do the things that you need to do in order to begin to scale your company. And so naturally, our company is growing. We are obviously in a space where now we have the opportunity to really show people what we can and are about to do. One thing that has definitely been humbling has been how many people reach out to us interested in working at our company, whether they have seen us somewhere, read about us, maybe seen me speak somewhere. And so high, talented, capable people, I just am very humbled and happy that we have the opportunity to attract really good talent. And being a Black woman, because, let's be real, some people don't want to work for a Black woman who is CEO and leading the company. And that becomes a challenge, going back to the question about challenges for Black women. Some people don't want to follow Black women. And so I'll let Megan answer the question about how just the rounds have changed. I know she's like literally in it, and I'm kind of speaking from, the founder side perspective of it.
Yeah, so that's a really, really great question. And the main idea is that everything is getting bigger. And particularly in the seed market, it's become highly overcapitalized, meaning there's a lot of people pouring more and more money into the space because they realize that venture capital as an asset class can be huge. So things that used to be a pre-seed round are now a friends and family round, and things that used to be a seed round are a pre-seed round, and things that used to be a Series A are now a seed. And so what that looks like is much larger rounds. So a seed round now can be $6, $7, $8, $9 million, when in the past it was far less than that. So what tends to happen is people are doing bigger deals, but fewer number of deals, right? So it's like, so I had $10 million, and before that could have gone into two Series A, and now it's going into one seed. And so the rounds are bigger, but the number of deals is smaller. I think that the other really interesting thing is that founders are raising money faster. Also, I think in between rounds, right? So it's like, oh, I have 12, sometimes people raise a pre-seed, a seed, and an A all in 1 year because things are moving so fast. But I think the biggest kind of key here is that the rounds are becoming much, much larger. Really exciting, even in Series A's, which are now the size of what used to be a Series B. Wonder School, Chris Bennett, who is here at Afrotech, raised a $20 million Series A. I don't even understand, which is awesome. But it just goes to show you, and really quick, I'm going to try to be fast, but this is one of the issues that people are having with really, really big funds. So these funds that are like $500 million or $1 billion, they've got an enormous amount of capital to deploy, and so they're making the deals bigger. It's like, I've got $500 million to get rid of. I can't be making $1 million checks and $2 million checks and $3 million checks. I have to go big or go home, or my LPs are going to be real mad at me. So I think just kind of the large theme is bigger check sizes, fewer checks.
Hi, my name's Carrington. My question is, how do you value companies other than their month-over-month revenue? What are the other important key points for you when you're putting a value on a company? First, and then my second part is...
Can you say that last part of the first question again?
What are the key points when you are deciding to value a company outside of the revenue? A, and then B is, I guess that's the main question.
So a couple of things. One, comps. So what other companies are in the space and what have their exits been? Because what that does, it gives our brain a track to what you could be, right? So if you're in the wellness space, we're going to say, okay, well, what did Headspace do? And what did Calm do? And what did Simple Habit do? And so we can get that potential exit in our mind because it's all about the exit. The second thing other than revenue that we look at is all in terms of thinking if a company can be successful is around engagement, right? So imagine you're bringing in all of these customers, right? And you increase your revenue, but if all those customers are churning out, if they're not spending any time on your app, if they only get on your app once a month, that's really concerning for us. And so I think prudent VCs are looking at where your revenue and where your high user numbers are coming from, as opposed to just growth for growth's sake.
Okay, and just one follow-up. What's the average amount of equity that a company in a seed stage gives up what's the average amount of equity that a company on a seed stage round gives up?
So it depends. It changes from company to company, but for unusual ventures, if we're considering it what we call a full deal, so we're doing a full seed deal, our goal is to own 20%. Last 24 seconds. We're good? All right, we're all out of time. Thank you all so much. Thank you, Sevetri. You did a great job. And also, I just also want to offer myself to any of the entrepreneurs in the room. If you want to talk, if you want to email me, you talking to me makes me better at my job, so feel free. Email is megan@unusual.vc. Real easy. Oh, and then tweet me. let's talk about your company. All right, thanks.
Cut it on. All right, let's hear it one more time.